Keith Newmeyer, a buddy of mine, says that silver is coming out of the ground at 7 to 1. So take 32.30 and divide it by seven, and you get $461. Now, I'm not saying that's going to happen, but mathematically, geologically, if someone said silver would be $400 tomorrow, would it be that far off? Yeah, it sounds crazy. It does. But that's the geologic. That's short of the geologic ratio right now. So roughly 32.30 divided by 42, which is about the average price ratio of the last 150 years. That's $77. Keith Newmeyer, a buddy of mine, says that silver is coming out of the ground at 7 to 1. So take 32.30 and divide it by seven, and you get $461. Now, I'm not saying that's going to happen, but mathematically, geologically, if someone said silver would be $400 tomorrow, would it be that far off? Yeah, it sounds crazy. It does. But that's the geologic. That's short of the geologic ratio right now. So there's man's ratio. There's God's ratio, you call it, which is the geologic ratio. The geologic ratio says it should be 460. The price ratio, because it's controlled on COMEX and on the LBMA, says differently. But I would argue that ultimately that's what this is about. With, like, for example, the BRICS talking about building their own metals exchange. It's not. It's about control. It's about the fact that the West controls the price, and these other countries understand that. And I think that building an exchange allows the price setting to move from a system that is massively rehypothecated and in essence fake to one that is more indicative of its real value, real price setting. So I think silver will go higher than people think possible. But just speaking mathematically, if you said $400, it would not be outlandish. Now, I'm not saying that's going to happen tomorrow, but certainly to see it north of $45 an ounce is based upon 150, 200 years worth of price ratio between gold and silver, Western derived price ratio, that would just be reaching the average. So higher than people think possible. And once you get above 45, there is no resistance. So could it go much higher? Sure. I've never told people to buy gold and silver to become wealthy. It is wealth. It's outlived 2 world wars, German hyperinflation, the Great Depression, every pandemic. It's wealth. And the biggest money in the world is proving that, not only through accumulation, but maybe even more relevant is the repatriation. It's removing the counterparty risk that, right or wrong, the perception is it's not a good idea to leave it within the confines of the LBMA or the COMEX, and that's why you're seeing all of these countries choose to bring it home rather than allow it to be held by third parties. So these are all pieces of a bigger puzzle. I'm fond of the term logarithmic decay, which is little by little, then all at once. Well, it seems that the moves that are being made in accumulation and repatriation is the little by little, and it's continuing. With gold, the price is following along with it. You won't see silver go to the moon without gold following. It's just that silver perhaps is more important to the powers that be from a strategic standpoint. And because they have become very wealthy in peddling war and all of the tools of war, well, they've had to keep silver cheap. It's becoming harder to do that now. So I would expect silver to outperform people's expectations. When? I don't know, but logic and positioning and technicals all would say that it's probably closer than we've been to ever. Yeah, I think, gold, I think gold will go higher than people think possible as well. But gold will be used, I think, to peg to a new system. You want to talk about once in a generation opportunity. Look, if I said to you, Adam, I can show you how you can double your money with it only, or in essence, double the amount of gold you own with it only reaching its average price of the past 200 years. Well, that's a pretty good deal, just reaching the average price point of 200 years, which is 42 to 1. And in fact, it's over double. You take an ounce of gold and you trade it into silver right now, you're going to get, at 100 to 1 ratio, when you factor in premiums and everything, depending upon the silver, I don't know, you'll at least probably get 90 plus ounces of silver. Well, I mean, that's happened like 1/10 of 1% of the time in the last 200 years.
Mm.
It's a speck of dust. So you trade your gold into silver, you get 90 ounces. If all we did was reach its 200-year average of roughly 42 to 1, you over double your money. And so, look, I just simply think that there are very few times in life where all you have to do is get to the average price of the last century plus, almost 2 centuries, and it represents a over a 50% increase. Um, I hate talking about buying silver to become wealthy because that's never why I've done it, never why I've recommended it, but it's hard to ignore. And it's really due to the Western central bank and commercial bank suppression for years that has created this coiled spring. I don't know that there are very many assets that offer that type of setup where your downside is next to nothing and your upside is stratospheric. So yeah, I mean, I guess as with as much sincerity and objectivity as I can offer, I would say that silver to me is the investment of a generation. And easy for a gold salesman to say that. I, honest to God, I mean it. And I don't know that there's a better place to put your money that gives you that kind of return, physical possession, which removes counterparty risk and such low downside. So to me, it's certainly at the top of the list. The public hasn't woken up, and that's largely a part, due in part to the media. I was working out the other day, and I never watched CNN, but I was on the elliptical machine at the end of my workout, and I was right in front of it, and gold had reached all time highs, and I was counting how many times it came by the ticker, and it came by like once every 47 or so spins of the box underneath the ticker on CNBC, whereas Bitcoin came up 8 or 9 times, 5 times as many, or 9 times as many rather, in 47 spins of the box. In other words, what I'm getting at is that the media has done a great disservice to the public, and maybe that's by design. I don't know, but all I can tell you is that if you would have told me at any time in my career that gold would be $3,300 an ounce nearly, and virtually no one in the country has any idea about that they're not screaming about it. In 1980, when it was 800 plus, it was on every front page newspaper, and everyone was interested in gold and silver dollars, whereas now it's off the radar completely and totally. So the sophisticated investor, the big investors, the institutional investors, they're all over it. The retail public, not so much. Don't get me wrong. I mean, compared to 2019 and back, it's way bigger demand by the public. But by and large, no. I mean, I was talking to Rick Rule yesterday, and he still believes that the number is roughly 0.5%, from Joe and Jane six pack to the Harvard Endowment Fund. That's the entire allocation of metals across the matrix. Just to get it to 2.5% would be a fivefold increase. You'd see no product in this industry overnight. So no, the public has not woken up yet. And that's another reason why I'm more convicted that the moves that I see by the big money are legit, because the big money always repositions long before the public gets it. And if you're paying attention, you can see the big money is wickedly the biggest deliveries. Like JP Morgan delivered 4 billion of gold uh, into the March contract for a client. Now, who's got that kind of money? They said for a client, not for themselves. Who's got 4 billion? Was it Warren Buffett? Is it the Fed? Is it the Treasury? Is it a hedge fund? But that's the kind of demand that we're seeing. The public asleep, um, central banks buying it at levels no one's ever seen, tells me that the public will jump on, but after the big moves have already been made. So no, nowhere near what I would expect it should be. Even as something as small as a 5 or 10% allocation across the board, we're miles away from that. I'll answer it in two ways. The conventional wisdom says that markets move in cycles, and that is the way that you win. You sell high, you buy low. You would, in that instance, you would trade gold or silver that have reached high peaks into asset classes that are undervalued and underwater. Maybe that's blue chip stocks paying a, trading at a single digit PE ratio, paying a 5-6% dividend, which is, by the way, where they used to be way back when considered fair value many, many, many years ago. Maybe it's buying, the real estate that you've always wanted, or that cabin up in the woods that you've always wanted. Who knows? You don't trade it just to go back into a fiat currency that hasn't fixed its problem, but you would trade it and move into a different asset class that is undervalued. So that's one line of thinking, and I don't have a problem with that. I think that is how you create wealth and continue to grow wealth. It's not in money in your checkbook; it's in assets, and riding one asset up, capitalizing on another undervalued asset. Sure. The other way of answering it is that, if you talk to someone like Judy Shelton, who says that 50-year treasury will be pegged to gold, if you look at what the BRICS are saying, they're going to peg gold to a new settlement currency. If you look at all of the talk around gold being pegged to a new system, the only way that I would say maybe not would be is if, and my friend Jim Sinclair, God rest his soul, he was called Mr. Gold. He always said gold would go to levels that no one ever thought possible. The number he said was 10,000, and then it would be pegged to a new system and never come back down. It would be the stability to a new system. So it's a nuanced question, but the conventional answer is yes, you would sell it and you would move it into a undervalued asset, one that, that we've been saying gold and silver are undervalued forever. Well, look at all of the asset classes that have spiked in an environment of easy money and low interest rates, real estate and equities in particular. Since 1982, interest rates have fallen at a 45-degree angle, creating the greatest bull markets ever in those markets. Well, those markets have yet to find fair value in an environment where, if the 10-year treasury kept going higher and higher and higher, what is fair value? So yeah, I think there could be an argument made that there will be great values to be found in traditional asset classes before this all washes out. The only caveat would be, does gold, and to a lesser degree silver from a strategic standpoint, get pegged to a new system? And I've argued since 2020 that I really do believe that gold, which the most powerful bank in the world, the BIS, reclassified as the only other tier one reserve asset next to U.S. Treasuries, will be just that. It's been the Treasury that's really been the peg since the end of World War II. And I think, who wants our treasuries any longer? Net since 2014, there hasn't been any new central bank buying of treasuries. Sure, some have bought, more have sold. And so a lot of that has gone into the only other tier one asset, gold. And that's why you've seen gold move so much, because the most sophisticated money in the world would rather own it with no counterparty risk than treasuries. So yes, but maybe no. I guess only time will tell. And that's the beauty of owning gold. You're not buying it to become wealthy. You're buying it to retain your standard of living, and it will give you options when others have none, if they are stuck in the system that is being reset, revalued, depreciated. And that is what I saw someone put up there. Gold is dollars down 35% against gold. Well, yeah, that's true. When gold goes up, that means in dollar terms, the dollar went down. And well, that is what Trump wants. He certainly does want a lower dollar. But we're at a point right now where, if you continue to devalue the dollar and aspire for lower rates, who wants to hold our treasuries? And how do you continue to fund a debt where $28 trillion is due by 2028? $6 trillion comes due next year. This year, $6 trillion. Or is it next year? Let me look and see real quick. I think
it's more than that, actually.
6 trillion of U.S. treasuries mature in just over a month. I'm sorry, just over 1 month. So how do you pay for that? And if you have 28 trillion due by 2028, but we only take in 5 trillion a year in tax revenue, that's 15 trillion, or halfway there. That doesn't take into account the spending over the next 3 years. So if you see less and less demand for treasuries, lower interest rates, and a weaker dollar, well, what does that tell you for the prospects of financing our debt? And this is where conspiracy theories are born. Could this be intended? Are they trying to reset the system? Are they threatening these tariffs, which really aren't tariffs to a lot of countries? They amount to sanctions, in particular China. Where does it all lead? I don't know. But that's why you own gold and silver, not to become wealthy, but because it is wealth that allows you to sidestep all of this uncertainty. And the biggest money in the world, that being the central banks, who in essence write the playbook, well, they're the ones who are saying to you through their actions, this is where we would go.